Dan Roberts, editor-in-chief of Decrypt, here to talk us through everything that's happening in the space right now. Welcome back to Real Vision, Dan.
Thank you. Thanks for having me back on. So much happening that we can talk about this summer.
Yeah, so what's on your mind? What are your folks writing about? How do you see what's happening right now?
Well, the first thing we have to mention is what's going on with price. We saw this kind of almost 3-month now pullback after the all-time highs for Bitcoin in April. And it was a little bit of an adjustment for those of us in crypto media. I mean, for you too, I'm sure. There was definitely a cooling in interest along with the cooling off in price. And I think it was also one of those moments that gave skeptics yet another chance to do a victory lap. You know, all the usual suspects wrote stories saying, you know, Bitcoin loses half its value in a month. You know, see, it's all, you know, the Nouriel Rubinis got to say, see, it's all a fraud and a scam. And, you know, you go back to the usual mantras that Bitcoiners had of, you know, just hodl. But you started to see people ask, are we entering another crypto winter? And the answer that we addressed in a number of explainer posts was, this isn't like 2018. This is not another crypto winter, even though prices dramatically dropped. And of course, now here we are, and we're starting to see them inch back. So maybe things are turning around. But the reason it never felt to me like another crypto winter was the buy-in, the support, the hubbub, the discussion was still, even though the price pulled back, louder and bigger and more exciting than it's ever been. It did not at all feel and does not feel like another prolonged winter period. Even with the price down, you started to see, you know, a continuation of public companies planning crypto ventures, making crypto partnerships, investment in crypto startups and big rounds being raised. And just, again, more discussion and excitement. And so I'm not sure that we'll ever again, and that's not to say any prediction about price. I mean, anything could happen with price. But I'm not sure we'd ever again see a period equivalent to the chilliness of that February 2018 crypto winter.
Yeah, I remember that crypto winter well. So you've got multiple folks writing about this, covering this beat. What is the thinking there about what's causing it, what's driving it, and what the future trajectory looks like?
Well, I think there's a few things. And, you know, one spiel I always say in all media hits when we talk about price is twofold. I mean, first, it's never just one thing. Everyone always wants to point to the one thing. You know, Bitcoin rises 11% in one day, and they say, oh, Bitcoin rises 11% on Amazon crypto job listing, because you got to have a headline. But it's never just one thing. It's usually multiple things. And the other thing I say is, don't listen to anyone who goes on TV and claims to know exactly what will happen next. You know, it's always funny. Someone will do a CNBC hit and will say, Bitcoin's going to 500,000. Maybe, but it could also sink back to 10,000. I mean, anything is possible. But I think the reason for the pullback after April was, first of all, you saw a big price run up in the months after the halving. And, you know, Bitcoiners love to pull out the charts that show that, you know, after every single halving, the price has gone up, although not always immediately. Not always in the days after the halving. Sometimes it takes weeks or months. But the data does show now that, you know, at some point in the aftermath of each halving, the price does go up big. So it went up, up, up. And then, as also always happens historically since Bitcoin began trading, when you see it rise big, eventually it hits a ceiling and you start to see some profit taking. I mean, it's no different from, you know, tech stocks in that way. I'm not saying that it necessarily always behaves like a stock, but when Tesla goes up big, when Amazon goes up big, when Netflix has a big run up, when Disney has a big run up after, you know, positive news about Disney Plus, you start to see profit taking. Some people say, all right, I'm not so sure it's going to get much higher than this, and I'd like to take some money off the table. And then you see it sink back. And we talk about resistance levels, right? I mean, in that big run up during the pandemic and leading up to April when it hit 63,000, we kept breaking through certain resistance levels, right? I mean, for years after the 2017 high, 20,000 was seen as a resistance level. It hit 20, then it sank, and it never got back to 20 until a year ago. And then it went 20, 25, 30. Oh, hold on to your hats. And then it was 35, 40. And we kept readjusting. Well, what's that ceiling? Then we hit 60. We said, wow. And then a big tumble. And so now as we talk, We're right around that 40,000 level. But since hitting 40,000 a few days ago, it pulled back and it's been kind of in that 36 to 39 range. So it kind of makes it look like 40,000 is our new resistance level for now. But so that's what I think happens. Look, it comes in waves, and it always allows skeptics to point and say, so volatile, so volatile. And yet actually it's really been less volatile in the last couple of years than it once was. And yes, it's volatile, but again, and I always sound like a super bull when I say this, and I don't mean to, but to the people who point to the big pullbacks and say, see, you can't trust it, it's not a store of value, zoom out, I say, zoom out. And if you look at the past 10 years, that line is up and to the right, despite some drops.
Yeah, and there tends to be resistance around the 50% retracement level from the 52-week high consistently.
Absolutely. Absolutely. That's another good way to look at it. And we can also talk about volume on exchanges. Like as soon as the price dropped by half, really, you start to see that volume go really flat because people weren't buying, but they also weren't really selling. The people who dumped had dumped, and the dust cleared and things just kind of went flat. I read a great post recently by Arthur Hayes, who has his legal troubles, the former CEO of BitMEX, but say what you will about the legal side of things. He has a terrific Medium blog. He's very smart, his posts. Very funny and kind of mordant. And he wrote, here we are in the summer, volume low, interest low, basically like what we've been calling this summer doldrums. And then he said, during this time, I just look at, monetary policy by the Fed. That's all I care about. And if there's inflation, then I just think, what are the things I can go to? And I double down on crypto, basically saying, see the forest through the trees.
So one of the main counter narratives to the Amazon story, in terms of the alleged price action coming out of this post from Amazon, which I never really thought had much causal potential, but obviously one never knows, was the story about what was happening with Tether. Obviously, Bloomberg breaking a story that Tether is apparently under investigation by Department of Justice for some actions I think that took place around 2017. The counter narrative to the Amazon story was that people in Asia who don't have access to dollar-denominated banking, who are holding large positions in Tether, began to unwind that position.
And it's interesting. I think there's a few things there. When you saw that Tether news, I don't know about you, Ash, but whenever I see bad news about Tether, because the whole agita around Tether is the claim, prominent accounts like Bitfinex, which is a good, Tether alarmist account on Twitter, the claim is no one wants to talk about just how Tether is holding up the whole industry, and that if Tether were to collapse or have some kind of issue, everything would tumble. And so, point being, when you first saw that news about the investigation, my instinct at least was to say, this is bad. But then pretty quickly, and especially because we didn't see big price action immediately after that story, you started to see the narrative that, well, actually, maybe it's good. Maybe it's okay if there's a crackdown on, the executive side. Well, that doesn't necessarily mean that that's bad for Bitcoin. It was also really interesting that this action was about things that happened years ago. This was not about right now. And of course, the last thing I'd say is it feels like every 6 months or so, there's a big, scary story about Tether. Tether opened its books and tried to prove that its assets really are backed by dollars fully. And then it turned out that, well, it's actually not 100% backed by cash. I said it was 100%. It's more like 30-something%, whatever it was.
Well, that's the cash or cash equivalency
right.
Number. I think the actual US dollar number is considerably lower. I think it's low single digits.
Yeah, which, was alarming. And yet, even once that happened, and that was a couple months ago, you didn't see big price action. So, I understand the people who think that Tether is kind of the giant boogeyman in the crypto room, and that, we don't talk enough about it and we need to prove that it's a fraud. And yet I'm tempted to think that maybe it's okay, and that's not me saying that Tether's completely above board. I think the jury's out on that, and that even though there have been a number of good attempts, there still hasn't been the definitive story that basically shows us either it's a fraud and they're lying, or don't worry, it's okay, it's legitimate, even though there's some shadiness there. Even though we haven't seen that definitive story, I'm tempted to think that maybe it's not the kind of disastrous precarious situation that a lot of people think it is.
Hey, if you like this clip, be sure to check out the full interview and more only on realvision.com/crypto. It's 100% free. Sign up now.